Now let's move our focus and take a look at the latest financial news driving the Nigerian fixed income market. Now for that, we are joined by Yetunde Ogunremi. She's an analyst at Stanbic IBTC Global Market. Yetunde, thanks for joining us on the show. Now, of course, we hear there was an OMO auction today with 200 billion naira offered. So it'd be great if you could start by throwing some light into today's auction.
Okay, the CBN offered 200 billion OMO bills. They tried to offer an October maturity of 100 billion and a December maturity of 100 billion. But as we speak, the results of that auction have not yet been released. We hope to get the results sometime during the course of the day.
Okay, what about yields in T-bill space?
Okay, the yields for today were largely driven by the results of the auction yesterday. Yesterday, the CBN offered the traditional 91, 182, and 364-day Treasury bills. Total amount sold was the same as what was maturing, but the CBN had tweaked the amount on offer in favor of the one-year yield. So the CBN sold 91-day bills at 10.35, 182-day at 12.09, and the one-year, which was the surprise one, at 12.249%. That came to a yield of 13.95%. For the 1 year, they offered 85 billion against maturing volume of 60 billion. Total subscription was 97. The range of bids was quite wide, was 10 to 12.95%, and the CBN eventually caught over 12.249% on the 85 billion that was sold. Right now in the secondary market, as expected, yields moved up about 60 basis points at the long end and about 34 basis points at the middle of the curve. So it wasn't quite unexpected that the yields had inched up in the secondary market on the back of the auction results. Now, for the 1 year in particular, the reason why we say it's a bit higher than expected, and we've attributed the reason for that high rate to muted offshore presence. Offshore demand at the auction wasn't quite significant, so it was a case of local banks, local market investors throwing in indicative bids that were then considered by the central bank, which resulted in the high stop rate.
Now, do you think that this will trigger more offshore presence? I mean, the 1 year T-bill, of course, as you say, printing higher than expected.
Okay, if you had asked that question about a month ago, I'd have said yes, that with current levels, the offshore guys will be extremely interested. But with the recent events and fluctuations of the oil price, we're not quite clear what kind of appetite the offshore guys are going to have. They'll be guided by oil prices, they'll be guided by exchange rate stability, and they'll be guided by the global risk environment in their regions as well. So it's early days. We'll see if these are new levels for interest rates. We'll see if interest rates are still going to inch up further, but we could see offshore presence significantly in the next couple of weeks.
Now, of course, CBN continuing to issue OMO bills. What kind of liquidity is supporting this, and do we expect more issuances?
Primarily, the CBN is trying to mop up OMO maturities from last year and earlier this year. For May, for instance, we expect a trillion to mature. CBN also has to cope with the FAC inflows, and there's a prospect of distribution of the excess crude account. So they are trying to mop up existing liquidity from the system. And so the short answer is that, yes, we should expect more OMO issuances in the next couple of weeks.
Now, this uptick that we're seeing in yields, what impact do you think this will have on the bond market?
Oh, the bond market did move up. The short end reacted a lot more than the long end. The short end of the curve, we saw an 80 basis point move. So the 2017 bond closed at 12.07%. At the mid-range of the curve, we saw a 50 basis point move, and at the long end of the curve, we saw a 30 basis point move. The curve has been inverted for a while, and it was no surprise that the short end reacted more significantly to the T-bill yields than the long end of the curve. In the coming days, demand will determine where the auction results will rest. Where the bond market will rest. Continued issuance of OMO would also determine where the yields will rest, but they have reacted quite significantly to the results of the OMO of the primary auction.
Okay, but what about your outlook going forward for T-bill yields?
Okay, going forward, everything rests on where OMO rates print. It rests on where offshore interest is going to be triggered. So we'll say that for now we see that the current levels are with yields of about 13%. Current OMO levels are between 180 to 270 days, and that is printed at 12.5%. It will be good to get the results of today's auction to know what the CBN sentiments are. But for now, I'd say rates have gone up about 200 basis points, and those are current thresholds.
Now, of course, we haven't spoken about the inflation rate. Now, that's gone down to 8.5% from March. It would be good to know your thoughts on that, if that met your expectations.
Okay, the inflation rate actually came out lower than market consensus. The expectation was for 9% for the month of March, but it came out at 8.6%, and this was largely as a result of the low base effect. Both food and non-food inflation were in single digit for the first time in a while. So the outlook for April is that inflation will go back to about 9.4%, 9.5%, peak at about 12% in August and September. So we'll see inflation in low digits for Q2 and early Q3.